Hey everyone, welcome back to Corporate Decoder, the place where we slice and dice those corporate filings. Today we're diving into Sandisk. Yes, that's Sandisk. Remember those SD cards? Their Form SNES1 filing is supposed to be dry as toast, but with a little digging we can uncover some juicy information about their future plans. You might even say we're about to decode their storage strategy bum TSS. This isn't just another document drop. Sandisk is spinning off from Western Digital. So this filing basically announces we're independent. Here's the plan. The big question, can they thrive on their own? First off, this is a registration statement, meaning Sandisk wants to sell shares and become fully its own company. The date is important, April 18, 2025, so this is a fresh look at what they are planning. It's an S1 filing, the go-to document for companies going public or spinning off. Sandisk Corporation, based in Milpitas, California, is the name we need to remember. For those interested in service for legal, give this person a call. However, keep in mind that the information here is accurate only as of the date of this prospectus, regardless of the time of delivery of this prospectus or of any sale of shares of our common stock. Keep in mind that this is a preliminary prospectus. Things can and will change, so keep an open mind. This prospectus talks about selling stock, specifically 27 shares of common stock. The key detail to note is that Sandisk won't get any of the money. It's for Western Digital, and any proceeds will be for Western Digital, and any proceeds will be for Western Digital is using Sandisk stock to settle its bills. Of course, there's a section on risks. Every company has to tell you what could go wrong, and it's always a long list. Here are some of the big ones. The world economy is a worry. If things slow down, especially in other countries, people buy less stuff, including Sandisk products. Sandisk needs specific suppliers for its parts. If those suppliers mess up, can't deliver, or raise prices, Sandisk is in trouble. They lean heavily on partnerships, especially Kioxia, for making their flash memory. If these partnerships sour, Sandisk suffers. They even note that lack of alignment with Kioxia could negatively impact their ability to react quickly to changes in the market. The market is a cutthroat and prices keep dropping. They have to keep innovating to stay afloat. If they don't, their business gets hurt. Cyber attacks are a major concern. If their systems get hacked or their products have security flaws, it's bad news for everyone. The spin-off itself might not work out as planned. They might not see the benefits they expect, and it could make things worse. Their stock price might bounce around a lot. This makes it hard for investors to sell at a good price. One big owner, Western Digital, has a ton of Sandisk stock. If they sell it all at once, the price could drop. In order to do all this, there was something called internal reorganization, where to effect the separation, WDC undertook a series of internal restructuring transactions to separate the assets, liabilities, and certain legal entities of WDC associated with the Flash business to us in exchange for a cash payment of approximately $1.5 billion by us to WDC, with a portion of the net proceeds of a term loan facility described below under financing transactions. On February 21, 2025, we entered into a loan agreement to comprise a term loan B facility in the principal amount of $2 billion, the term loan facility said, and a revolving credit facility in the principal amount of $1.5 billion, the revolving credit facility. And together with the term loan facility, the facilities ebbed. This basically means that Sandisk is taking on a lot of debt. $2 billion in term loans and another $1.5 billion available as a revolving credit. That's a lot of leverage for a newly independent company. Let's talk numbers. This is where things get interesting because it gives a preview of what Sandisk looks like standing on its own. Remember that these are pro forma, basically what-if scenarios. Looking at their numbers for the 6 months ended December 27, 2024, point of view, net was 3,759,000, as Warren Buffett would have noted. That is great. But this is only 1 point, so what else happened in the past? The table presents a summary of historical revenue data categorized by end market. During the 6 months ended December 27, 2024, cloud, client, and consumer comprised 14.6%, 55.8%, and 29.6% respectively of the total revenue. The cash and cash equivalents are the most basic financial metrics for a company. Looking at cash and cash equivalents, there were $804 million compared to 32.8 in the past year. So that's good to 48 in the past year. So that's good cautious to a business as oxygen is to an individual. Not usually thought about when it is present, but sorely missed when it is absent. There's also a change in how they handle a venture in China Unisplendor Corporation. It looks like Western Digital's share is being transferred to Sandisk. Basically, Sandisk will now manage this Chinese business relationship directly. They mentioned that they might be writing down goodwill in the future due to a drop in their stock price. We can call it out for now. It is more likely than not that they will record an impairment charge in the 3 months ended March 28, 2025. The Sandisk board is creating the standard board committees you'd expect: an audit committee, a compensation and talent committee, how much the big bosses get paid, and a governance committee. But for a company this important, there should be one or more. And that's it for this SEC filings, folks. So what's our take on Sandisk? First, let's be frank, the dependence of Kioxia and the overall market price drops worries me. All that being said, the revenue jump compared to the same period last year is pretty good and could mark a turning point. At a high debt burden with the two facilities, while the sector and industry is known for being hyper-competitive, is troubling and needs to be carefully analysed when investing here. There's a decent chance of good and decent chance of bad, but based on this report, I can't tell which way is more likely. We need to see a few quarters in the books with this company under its own power. Remember to do your own research before investing. This video isn't financial advice, it's just a starting point. Bucked in. Thanks for watching. Don't forget to like, subscribe and comment with your thoughts on Sandisk.